Alrighty, traders, welcome back with another session here with the team, where we go ahead and talk about trading opportunities. Not only are we going to talk about trading opportunities today, but of course there's a lot of things happening right now around coronavirus. Got to get that right. Coronavirus. We've also got, of course, U.S. oil. We're going to talk about that as well. We're also going to talk about how the dollar index has been affected by things happening in the market right now. And don't forget about stocks. We've got Tyson in the house and Chris, and we're going to talk about stocks. Stocks are moving, and the opportunity came out a couple of weeks ago that Tyson spoke about, and we're going to talk about that move that took place and how traders can take advantage of current situations as well. Also, what I'm going to go ahead and talk about is two currency pairs per analyst. We're going to take two currency pairs, break it down, look for trading opportunities that you can take advantage of right now. The markets are moving. It's exciting to be in the market, all right? So with that being said, let me go ahead and introduce the panel, and I'm going to go ahead and start off with Tyson. Tyson, how you doing?
I'm doing good, Gary. How are you?
Well, I'm doing fantastic, man. I'll tell you something, you're looking at all these technical things, trying to figure out, making sure that the sound's coming through, and it's complicated, but we get in there. So great. I'm glad you're good, Tyson. Chris, how are you doing?
I'm doing great, Gary. Thanks, and nice to be with you and Tyson, and looking forward to getting some good conversation going, as always, with these segments.
Absolutely, absolutely. Well, let's go ahead and talk about the first thing that's come up, that is, of course, coronavirus. How is that affecting the stock market right now? Tyson, if you can give us a quick view on stock market pricing right now, and I know you did speak about earlier on when we had conversation before the session that the opportunity really was a couple of weeks ago, maybe even last week when you brought out those stock picks, right? What is the situation right now?
Yeah, it was. The question is should we be buying now? Where's the stock market? The time to buy was an optimal time was about 2 weeks ago, and we had talked about kind of picking your stocks that you want to go into. We had that stock list, and the statement. I don't know where it comes from, but the statement, don't look a gift horse in the mouth. And we got these stocks that have rallied up huge. And I just told Chris earlier, because we've got this big rally, even from last week, when you can get up 5, 10, 15% in 1 week in long-term investments, markets don't go in a straight line. So I took the opportunity to sell those stocks, get back into a cash position. However, I want to mention this. We're due for another correction. I think we're going to correct a lot of the leg we moved up. However, we're going to get back to really good levels again, and those are long-term positions that I still want to buy. I just want to buy them at a cheaper price right now.
Well, that's pretty much it, right? If your trading approach is ready, or your investment approach is ready for a long-term outlook, then getting in instead of getting in at $30, getting in at $33, it's not a big difference, right?
Yeah. Well, it can be. It can add up. I mean, for example, I mean, it's I was looking at a lot of stocks, and we have a lot of these. Morgan Stanley is a good example. I said I wanted to buy at 25. It never got anywhere near 25. However, I was able to sell those puts for $4. So I collected $4 in income, and I closed them today for $1.65. So made about $2.35 on that trade overall. That's almost a 10% return in a week. That's if I can get a 10% return in a week, and I didn't even own anything. What I'm going to do is I'm going to wait for that next flush down, which I think is coming. We'll talk about the stock market here in a little bit as far as those levels. When that comes, I think I'm going to be able to get back into positions like that and just kind of rinse and wash and repeat. So.
Yeah, exactly. And Chris, you got into a couple of stocks that Tyson spoke about, specifically on Capital One, and you made a good return on your investment on that, right?
I did. So we talked about it last week. We put together that little stock sheet, Capital One. I ended up getting a chart alarm triggered at 40. I jumped in and bought it, got filled just over 41, like 41.10, and had a chart alarm set. There was a monthly pivot and $60. It's 50%. Pretty much. So it's like I'm closing it, and a lot of the things that I've bought had the same, like 15, 20+% gains. I'll take that cash and I'll sit on it and I'll reapply it towards those lows. So I mean, we have a lot of lows from March in pretty much any instrument. We're going to look at we're going to talk Forex market, but stocks as well. I mean, all these great stocks, all these bottoms that may not be the bottom, But I would imagine if you're looking at an investment from the long-term side of stocks, I mean, there's a lot of great prices to be buying those dips and buying those lows from March. And if we see them again, that's good. I just see it as a great opportunity moving forward.
Yep.
Right. Now let's move away from stocks right now and take a look and see. We'll come back to that. Definitely, there's a lot more chatter about that. But let's go ahead and talk about the dollar index right now. We've had a lot of news come out. We had jobs, unemployment claims, and I would say with the unemployment claims, it was inevitable. We were going to expect this. So all the news around the jobs right now, last week Wednesday, Friday, this week, it's all pretty much expected, right? But how's that affecting the market and trading opportunities?
Well, the dollar's getting weak for now, and it's sitting at a very interesting level right now. As we pull up the chart, if it breaks through, we've got this leg down, this kind of AB down that we formed on the daily, and what's interesting is that level I think could hold for a day or two, but if it breaks, and it may not hold. I'll kind of explain why, but if we break through there, I think we're going to go kind of do a reverse gap fill right where you have that up trend line going. And I think it's going to get down there fairly quick. Now, here's the reason why I think we're going to break fairly soon, because we had a demand level that was created back at that little pause in March, at the beginning of March. There was a little pause and then that scream higher. That was a nice demand level that we've now come back down and tested to form that B, and we've kind of sucked out some of that demand sitting there. So now we're retesting it. So we got to remember, every time we test one of those spots, we gotta be careful with support and resistance sometimes, because it's almost like the analogy I use is imagine a sumo wrestler jumping on some plexiglass. Eventually, that's they're gonna punch through it, and so we formed the demand, we bounced. We're sitting there now, we're basing a little bit. The longer we're at or near this level, the bigger the violent move down, I think, down to those to that 12,200 level or so is going to be. However, there, I think is going to be a really nice opportunity to take profits in my Aussie dollar positions, different positions like that, and potentially look for another nice swing higher.
And on that note, I mean, I don't know about you guys, but I'm seeing the signs of like a textbook cup and handle pattern.
Yeah.
A bearish cup and handle where you had such high volatility that there's no left side, there's no left shoulder, there's no left tip. But when you have that really high vertical top and it comes straight down and it just pulls back and it sits at that low, when that low breaks, that's like essentially the neckline. There's just no left shoulder. So that is a cup and handle formation. And Tyson's right. Like if that level breaks, we should be going. Just measure that top to bottom. If you measure that swing and go down to symmetry, you're talking right about that 12,200, 1,200 level. That would be an awesome run against the dollar. We should see a big squeeze on Aussie dollar, New Zealand dollar, possibly Euro dollar get some traction back again above 110 perhaps. Pound dollar has room to go up to 27, 2,800. So I mean, we could still make a really, really strong case to see the dollar weaker in the short term.
I love the word you just used, Chris, real quick, squeeze. And that's exactly what this is. We had a bunch of money stacking in the dollar. And what's going to happen if we break that low? And if you're wondering the low, again, just to define this, it's that B low at 12,510, 12,500. There's going to be most likely a lot of traders have stops sitting right there or near that. That's, in dollar pairs. And we could experience a big short squeeze in there. And actually, this is the opposite of a short squeeze. Essentially, this would be the people, panicking out. Short squeezes are usually where a bunch of people are shorting stocks and the stock just rallies up like a banshee. In this case, it would be the opposite of that, but the same theory works.
Right.
Sure. Now, Chris, are you paying attention to any of the U.S. crosses? I think you mentioned the dollar trade against the Aussie. So Aussie US dollar?
Yep, Aussie US dollar. Tyson and I are both extremely interested in that one. New Zealand dollar, I have some positions in that. I've been scalping the dollar CAD quite a bit. I've been scalping the pound dollar quite a bit. The euro dollar I've stayed out of. I had a good run on euro dollar from 108 to 115. I did not get tied up in the drop from 115 back to 106.50. As it's kind of, at first. Number one, we haven't seen the euro dollar move like that in over 2 years. We were in a 2-year channel, and all of a sudden it's just this blast off, and it's like the rocket shoots up and then explodes in space and just drops with gravity back down. That's essentially what the euro dollar did in March. So
let's talk about the Aussie US dollar, and is that one of the pairs that maybe you'll be looking at a setup?
I'll let. I mean, Tyson's talked a lot about the Aussie dollar. I'm in there right next to him. In fact, I took some safe profits today. I had some levels in around that 50, like 56, 56.50 or so area. I had some nice low positions on the Aussie dollar. Lows around 56. My wick low goes around 55 and change, but 56, 56.50 had a couple low positions. A nice little run today. And, and we're doing this on a Thursday. Tomorrow is Good Friday, going into Easter weekend. This is one of those vibes that I get that the market's been doing this a lot the last couple of years. It's like trade when no one's watching. It's like, look, it's a holiday weekend, and I know it's stay at home, and I know it's coronavirus, and we should all be trading. We should all be like, never leaving our computer, because there's so much opportunity. But it's just one of those days, and this week has been, just a pretty firm Aussie recovery, and it's going into. Today's the last day of the week that the New York Stock Exchange is closed tomorrow. It's Good Friday. Most banks are closed tomorrow, but yet there's still a lot of volatility, a lot of trends, a lot of drifting going on. And I think we're going to see that continue to squeeze on that Aussie dollar. I love 6,400. I love 6,450. I wanted to safely protect some profits today, but I'm still holding a reasonable position. And if it gets up towards, I know Tyson likes like 66, 67. That would be awesome. And if we see that cup and handle break on the dollar index, then we're most likely going to go to those levels and have a big.
Well, let's go ahead and pass it on to Tyson then. Tyson, so what is your 2 cents on the dollar trade against the Aussie? So the Aussie dollar, what are you expecting right here? What are you looking at?
Yeah, it's in actually a really interesting area, and I think Chris is spot on with this. If you go, I like the chart you're on right now, but go to a daily real quick. And the reason why is we've got a kind of a magnetic level, and it's interesting. We were talking about this in our analyst brainstorming meeting yesterday. There's a cross of a couple moving averages, smoothing averages, and kind of support and resistance levels right around that 66 level. However, so I think ultimately that's where we're going to get up to. However, if we're looking at kind of a level of supply and price is going to continue, people got to remember this. Price is going to continue to rally until it finds the largest stack of sell orders. That's just essentially what's going to happen. And that we have an indication of a large stack of sell orders sitting right near 64.70, 64.75 in that level.
Okay.
So what I'm expecting is I'm not sure if we're going to just get up there right now, other than the dollar sitting where it's at, like we talked. If it starts to break, then we could pop up there. However, I like the idea of lightening up my positions or hedging it in some way, and then looking for that next kind of pullback, buy low, and then wait for that next pop up to 74 or 64.78. We're going to struggle around there. We're not going to get there through that and just blow through that. However, I do think that ultimately, before we maybe turn down more aggressively, I think we're going to get to 66. So to cap all this off, I wouldn't be an aggressive buyer right here. However, I would only have a buy bias, and I would start lightening up my buy positions or hedging them. I'll explain the way I'm hedging it here in a minute. And then look for that retracement to buy lower and then ride it back up to that pop. And I think a very safe target, I think, is going to be that 64.78 level.
64?
Or 64.75 is what I'd say would be a safe target for me.
Now, if I look at 64.75, I'm going to mark it off around about there, okay? And I'm going to go ahead and just compress a little bit to see where what is it that you picked up on this?
Essentially, what we see here is we see that little pause rally, and then we see the break below, and then there's a couple pause bars there. So what was happening is the bulls were trying to create a bottoming there, and they just failed completely, and massive sellers stepped in. So what that indicates potential large sellers interested at that level. And so there should be kind of a magnetic force that pulls us up there.
Gotcha.
Agreed.
Gotcha. All right. Well, I'm going to flip over to
real quick, Gary. The way I'm hedging this is I have a bunch of positions, and I have my average. I'm up on a lot of my positions, but I'm down on some, and I don't want to close everything. So the way I'm hedging this, instead of just going flat out and just closing all my positions, I'm actually saying, you know what? I like the short in the Aussie yen. So I like what the idea of that trade is I think the Aussie's getting a little overdone on the upside. I want to pair it off a little bit, but instead of closing my position, I'm going to go short the Aussie yen. And what that does is it creates, and this is important for students to understand. If I have a Aussie dollar long position and an Aussie yen short position, what that creates is a quasi, or essentially a kind of a dollar yen short, because I'm short the dollars and I'm short the yen, or I'm long the yen. And so I got to make sure that I understand the correlations of what I'm trading, because if I go to the dollar yen chart and I'm not bearish on that, then that's not the right hedge. So with that,
Yeah, because it looks like it's
that's kind of
pretty bullish right now.
a synthetic short in the dollar yen. So if I go to the dollar yen, what I got to do is I got to go to the dollar yen. And I'm not like wildly bearish on the dollar yen. The reason I like the dollar yen, at least for the next couple days, maybe the next week on the short side, is because we are starting to bump up towards highs in the equity markets. I think we're overdone on this risk on type of move over the last 2 weeks, and we could see some buying pressure come back into the yen. So that's the reason why I'm hedging it that way. And because I got to pay attention to Chris, and Chris also confirms that that's the best one that he likes, is if he had to short something in the Aussie.
Well, that's because by necessity, I was long Aussie CAD, Aussie Swiss, Aussie New Zealand, Aussie dollar, short Euro Aussie. So once I decided, well, I mean, could I get long Aussie yen too? I'm like, well, what if? And so during March, I mean, Aussie yen was a great trade that I took down quite a ways, and that allowed me to wash out some of those other positions that I was holding. So what's been amazing, I had an interesting discussion this week with my trading room, because, you know, we have in the last 3 weeks, I feel like I've changed the way that I've traded over literally 5, 6, 7 years. I mean, I've made so much consistent profits by just buying low, selling high, setting and forgetting the levels, and just trading big levels of support resistance. There was enough irrationality in March that it made me take a step back, reassess these levels, and then get more of the nimble, agile, trade what you see, get in, get out, take advantage of the volatility. I mean, I haven't had to trade this way in a long time. The good thing is, I'm glad I have that, you know, ability. I'm glad I have that skill set to do it. But also in the trading room to switch things around and show traders that, look, we can still plan our trades. But literally, fellas, in the last like 2 weeks, volatility has been very different. You know, if this was a conversation we had 3 weeks ago, and it's like, we're seeing 600 pips a day, we're seeing 400 pips a day, this is freaking awesome. Just jump on. Literally, this week has been, we woke up early, we traded the London session, and we sat for 2 hours and waited and planned and watched. And then near the end of our sessions, almost every day this week, we just start to get some movement. And so we're there to kind of start at ground zero and catch the flow of the morning and have our fingers on the pulse, which is important. So we actually have the plans coming together and we make some profit. But it is not the same market it was 3 weeks ago. You know, and call that $3 trillion into the markets. I mean, something is, all this excess liquidity has, just like we had back in 2014, 15, 16, we had so much excess liquidity that it suppressed volatility. We've been coming off of historical lows in volatility. So it was inevitable that we saw a pop the way we did in March. As Tyson said, if we start to see, you know, the exhaustion on these retracement moves in the stock market, I think that inevitably leads itself to more selling in the stock market ahead, which means more risk off, which means more heightened volatility. If the VIX, for example, if you're watching the volatility index, if that starts to creep back above 50, we get to 55 and 60. I mean, we had highs this year at 85. Yeah. So if we start getting back above 50 on the VIX, I'm definitely looking at yen strength, Swiss franc strength, and possibly dollar strength. But again, kind of that risk-off environment. And more than likely, we'll see the Aussie take a breather. We'll see the New Zealand take a breather. The pound will probably take a breather as well. But it's not there yet. Like, that confirmation isn't there yet. So any type of indecision, start looking for that to maybe pivot going into May. April, May.
All right. Well, you know, we are technical traders, right? So all this fundamental stuff is great to support what we're looking at from a technical perspective. And I always look, the years that I've been trading, I've always tried to keep technicals at the forefront of my decision making before I go ahead and think about fundamentals. Fundamentals can maybe sometimes, I believe sometimes fundamentals can scare traders from actually doing what the technicals are telling you to do. And so taking a precautionary step in making sure that when you're trading the tops and bottoms of a trade, that you're using some sort of strategy that makes that helps confirm the turning points of these tops and bottoms. And so with that being said, I'm going to jump into a currency pair that I'm following right now, which is going to be the New Zealand Swiss franc. I'm going to talk about the Aussie CAD. It'll be my second one. But the New Zealand Swiss franc right now, I think, is really, really hot. And if I go to the daily time frame right here, this is what I'm looking at. And trust me, it is not just this pair. There's a bunch of pairs that are setting up very similar to this. I'm going to move it down to a weekly time frame right here. Check out this weekly. And if I break it down to the weekly, we've hit bottoms right here a bunch of times. We hit tops over here. Markets demanding another rally to the upside. And so I've already gone ahead and set up my automated trading robot, which is Right Trader Mac. And I've gone ahead and said that, hey, above this level right here at 0.5687, I want to go ahead and only buy. So I said buy above that level. So if the price moves down below this, I'm going to be on the sideline, not doing anything. But above this level, I'm buying. And I said that I'm going to go ahead and take some short-term profits to the upside right here. This is my short-term profit right here at about 61.63. So I've gone ahead and I've moved it down to a lower time frame. And I'm looking at this right here on the lower time frame. And I identified a leading diagonal right here. Now, leading diagonal normally appears in a wave 1 structure when we talk about Elliott wave. And this is exactly what it's doing right here. It's led up into a nice leading diagonal. And so I'm expecting a blowout right here. When this blows out, it's going to move very quickly to 60.98, which is just shy of my target right here. Where is it? There it is, 61.61. So 61.64. No, 61.61. My bad. It is 61.61. So 61.61 is my target on the daily. And so my short-term time frame is actually confirming the same sort of directional bias and target we're anticipating resistance to be in. And you guys both know that support and resistance is not a defined price, it's an area. And so as I'm looking to take profit at that level, what I've done is I've taken my trading robot, and in the inputs there, it has a function there that I can actually set a price where I want to go ahead and close out with profit, but also go ahead and remove my EA from the chart, which helps me keep out of the market when the markets are doing other things after the trade is completed. So that's what my trade setup is there on the New Zealand Swiss franc. I'm still, even though it's testing this resistance, I'm definitely, it's an intraday trade, but I'm definitely focusing right now in the next 12 hours to 24 hours. I'm focusing just before the weekend at that level. I want to see it blow through that level. If we can break through that level on the tops, I think we're going to rally up to that target, which, by the way, is in about, let's take a look right here, about 230 pip to the upside. So about 230 pip to the upside. Hey, another very important thing why I'm looking at that as a target, check this out as well. I got this level right here. So this is the top and bottom of the leading diagonal, or the opening part of the leading diagonal. It's 250 pips. Look at the breakout from here to there. Here we got 238 pips. So it lines up, the technicals line up with the target. So I'm real excited about this one. Once we blow out, I think we got a nice 250 pip rally to the upside after that breakout. So that's my pair right here that I'm very focused on. And what do you guys think about that?
Gary, as you're talking right now, I am setting up Right Trader Max to rock and roll, sir.
Yeah, I love the trade. The only thing that I would differ is I might be a little more conservative. I think you're 100% spot on with the direction, the levels where we're going to go to. Only thing that concerns me as far as the target would be we have a gap at 59.50. We did have a gap fill, but oftentimes we'll have additional reverse gap fills or additional tests of those. So I think what might happen, but trading it with Right Trader, here's the nice thing about everything I'm going to say, guys, and everybody watching. I don't have to worry about this with Right Trader because it will manage the trade for me. So what I would do is I would just turn Right Trader on, because I think what's going to happen is we're going to go to 59.50. We're going to bump around there, retrace, maybe a decent retracement. I'm not talking crater down, maybe 50, 100 pip retracement down. Sure. But Right Trader is going to catch that, and then it's going to get back long at those low prices and then ride it up to those 61 targets that you were talking about. So yeah. I think this is a great looking trade. I think we'll struggle around 59.50, retrace, and then go back up to those levels.
Sure, and you know what? I'm all good with this type of retracement right here, because this is just confirming that we have our trend taken off like this as the channel start moving with the market right here. So that, I believe, is a possibility, and that's pretty much how the market would and expect to move, right? But hey, listen here. On a bonus for me would be a strong rally to the upside. I'm not expecting it, but if it happens, bonus. But if it does trend like that, I'm going to be pretty happy with that. But you know, you're right, Tyson. With Right Trader Max, what it does is, and any type of trading strategy that you use, right, that you're comfortable with, as long as that trading strategy is applying sort of a risk management tool to it, which means that it's moving or trading with the market, especially when you want to become a little more aggressive on these aggressive upside moves and trade off the lower time frames. You want to protect your position a little bit, but also not put your stop too much in the way so that you give the market a little bit of room for the market to move to its target. And so I'm just pretty happy with
real quick about that. And so we get a lot of questions of like, hey, I took the UTP and the UTP is phenomenal. Why do I need a system? And I just want to mention this real fast, but it's very important for me because systems help you. We all know that the market moves in waves, and we're supposed to, if we're looking for this as an example, we're looking for that to go up to 6150 or 62. Okay, it's not going to go in a straight line. It's going to go up by 50 pips, retraced by 20. It's going to go up another 50, retraced by 30. But what a strategy allows you to do is it allows you to systematically get in low, sell high. Get in low, sell high. And so for me, I love to think that, man, I'm super disciplined. I'm like, but you know what? Man, I can be an emotional mess. This business has a way of exposing some of the monsters in our head that we didn't even think we had there. And so we need to realize that in a strategy like Right Trader, like Accelerator, like Turning Point, any strategies we have that can help you be disciplined to follow through with your plan, from my standpoint, is huge. It's worth so much money because, again, I can be right, with the analysis. I can be right on paper, but did I make money? Did I pay myself? And the strategies help me make sure that I do what I said I was going to do.
Sure, yeah, absolutely.
That's perfect that Tyson says that, because this week actually in the Right Trader Max class, I kind of broke it down by, what are the minimum things you need as a trader? The minimum thing, like the basic level. You want to find direction. You want to identify where you're wrong and identify where you're right. Like that's always going to be a part of a trading plan. So, I mean, we're talking through a strategy and system that has that at the core, but then you have the intermediate and advanced features of, like Gary said, he wants it to buy above a certain level. And he wants it to focus on what we see the markets do all the time, which is they go up and they score a point, they pull back. They go up, they score a point, they pull back. We're looking at that breakout, and that if it blows to that level, I mean, I'm the reason I just deployed it right now as we're having this conversation is like it looks great on the 15-minute chart, it looks great on the 30-minute chart, it looks great on the 1-hour chart. The structure's there. I know that my downside is minimized. I know that I have risk already identified, and I have upside that's in. The reward is greater than the profit or the risk. So I mean, it's worth trading, even if we have a retracement. I mean, the good thing about a robot too is it keeps me disciplined, because I know that the robot logic is going to do what I should be doing. But that's the problem is, like, I mean, I've had, I don't know, 10, 20, 30 different strategies over my career. And there's always been a way to talk yourself out of something. And most of it's like the first time you experience a loss. So the first time you're like, okay, I'm going to follow these indicators. When it gives me a green arrow, it gives me a red arrow, I'm going to buy it and I'm going to sell it. And then you do that and then you lose. And you're like, well, that's dumb. I shouldn't do that anymore. But it's like, but if you give it time and build a sample, you'll see that that's really what plays out. And so, I mean, having a robot that doesn't care and has no emotional tie to those wins and losses, you just set it up for success in a good area where you have room to run. So I'm a big fan of open space. When the market has open space to run, give it a chance. And I mean, we just see price action work this way really consistently. And it's been I mean, we're not tooting and talking Right Trader Max, but we are, because I mean, Gary, you're using it every day in your room. I'm using it all the time. Tyson, you've heard us talk about it and blabber about it a ton. But we're showing traders that it's working, and we have the features in that we can do anything that we want when it comes to planning those trades. So it has made our whole process a lot easier, and that's really what ultimately you're putting the process together with, is just taking a good logical system and executing your plan.
Sure. Now, I don't know who was last. Tyson, your mic is muted.
Last thing on this real quick for me, I've been trading for 19 plus years, and I kind of pride myself on being kind of, I understand all asset classes, I understand economics and all this kind of stuff, but sometimes I'll tell you, and this happens often, you can know too much in this business, and you can get in your own way. And sometimes oftentimes, those that know the most don't necessarily perform the best because they do get in their way. And what I love about having a strategist system is that if you build the system right, if you trust the system, just get out of your own way. Drop the ego, get out of your own way, and just let it do its thing. And that's really the thing that I have to. Unfortunately, sometimes I have to remind myself of that because I still think sometimes I can outsmart the strategy. But take it from me, guys. 90% of the time, I'm not outsmarting the strategy. Just let the strategy do what it does.
Sure.
And I think the emotions that come with that too, Tyson, is and again, this is all a learning curve for everybody. I mean, I have not really embraced automation for the last 8-9 years. It's only been the last 2 or 3 years that I'm like, I know myself as a trader. I'm confident enough in my ability and how I see the market and what I do in the market all the time that now I know that if I can automate that, my decision making is cleaner. That way I'm not second guessing. That way I'm not thinking like, well, what about this? Or what about this? Well, I read this or not, like Tyson said, get out of your own way. Get out of your own way, and what you worry about is the trade size, the deployment, and just make sure like the stop loss is where it should be, out of the way. Give your profits a chance to run, and consistently protect them. And you set it up for success that way, and you just do the math. If you have a decent win percentage and you have a decent risk-reward ratio, you're going to make money. It's mathematically that simple to be a profitable trader.
Absolutely.
It's just part of the plan.
You know what? Funny that you talk about the type of history that you had going through different strategies. And when I first started trading, I tried to become a swing trader using indicators and just relying completely. In fact, I would not forget this. It was someone that thought they knew a little bit about the market. After the fact, I learned that this person had just learned how to trade the market about a month before they were trying to teach me and charge me all this huge amount of money to be able to learn how to trade the market. But the funny thing is he spoke about two indicators. It's called one indicator. It's called the CPI. It was the percentage chance CP change percentage indicator or something like that. I'm not exactly sure. But what this indicator did is it really just gave overbought, oversold conditions. It was an oscillator giving us overbought, oversold conditions. And he said that when the market goes to 80% sell it, when it goes to 20%, buy it. And he says, man, this thing makes money all the time. And in history, if you go back in the past, it does look very profitable. And so what happened is I did this for the first week after I'd gone through my training, paid a bunch of money for the training, went through this my first week, and I'm like, man, this is awesome. I turned a $50,000 training account into $70,000 in the first week, and I thought, this is it. And then that was it. That was exactly it. It was over there.
That was it.
I think
we hit the non-farm payrolls, and I didn't even know what non-farm payrolls are, right? The non-farm payrolls came out. I'm like, what? What is this?
Mm-hmm.
I got in such a deep drawdown on that position that Friday that I had to leave it over the weekend. I didn't even know that the weekend the market's closed. I mean, that's how educated I was. And I went back on the Monday thinking, okay, well, it must be Monday, not Sunday, right? So went back on Monday, deeper drawdowns, and Tuesday wasn't even better. Wednesday was not even better. And by the way, I did not even have any sleep. It was like watching it tick by tick. Yeah. I was living and dying by the candle, and because I didn't know better. And I ended up losing a good portion, in fact, about 80% of my capital. I'd eventually close out. And guess what happened after that? The market turned around and went back up. And so I realized that, hey, listen, there's something going on. And then I heard a rumor that, the brokers are watching your trades. It must be that. They're watching your trades because they're interested in my small little account, right, and they want to go ahead and screw me over. All right? So going back to what I was saying there, the trading strategies that we changed. I started as a swing indicator trader. Then I moved away from that and I went into scalping. And when I went into scalping, that actually hurt me a lot because I could never go back to swing trading because I was always anxious to take more money. Because I was so used to getting in and out of the market that by the time I actually got to a point where I wanted to try and swing trade, it was really tough for me to be able to change and convert over to a swing trader. And so it took a long time because, I traded a big fund over in 2018 that I was trading 2,000 lots at a time. I'm talking about standard lots. And so you had to be in and out of the market quickly because the profits came quickly and the losses came quickly. So, but I moved to becoming a swing trader and I've changed and I think I've got more comfortable now as a position swing trader to allow my position to run in. And that's really, I think that's maybe a bit of advice for anyone that's starting to trade and trying to figure yourself out. Just
so
realize
that, Gary, that's so important because all three of us are swing traders. We set up levels, we let them play out. However, what you guys are showing me, and I've known this for a long time, but you guys are doing it brilliantly, is you're taking swing trading ideas, swing trading targets, swing trading levels, and you're intraday scalp trading towards those levels with that idea in mind. So it's that seek and deploy. It's coming up with a professional idea and saying, okay, well, a lot can happen between here and there, but ultimately we're going there. So instead of trying to guess, let's just trade the short term and compound our accounts to that point. And that's really what you guys have been doing really well. And so for me, I've been slowly over the course of the last few months starting to adopt more and more of that. And what's nice is it allows you can have a core idea, but it allows you kind of to trade around that idea and generate income while these other trades are playing out, which has been great.
Absolutely.
Yeah.
So let's jump into another trading opportunity. What I don't know who I left off with, if it was Tyson or Chris, but what other trading opportunity, what other currency pair can we go ahead and break it down? And I'm talking about breaking down from like, hey, this is the entry, this is the stop, this is where I'm looking at my targets at.
Yeah, you know what, Gary? I'd like us to take a look at the Aussie New Zealand, partly because this has been my my swan song for the last year. I've got a nice little chunk of profit that's running right now that I'm not even near done completing. So I'm curious, Tyson, you had mentioned earlier, what about would you be interested in buying it lower? I'm like, of course I would. So I'm wondering what you're thinking, like, as you see the Aussie New Zealand unfolding right now. I mean, I'm looking at a great weekly candle coming up into that yearly pivot resistance around 105. We had a previous high at 105.30. Look, here's my thoughts. We have a low back in 2014-15 at parity, 1.00. It was just above that at like 1.0040. With everything that happened in 2019, we had a little flash crash in January. What happened in March is the Aussie spiked down again. The Aussie New Zealand ended up tapping those lows at parity again. Now, I have been long since 106, 105, 104, 103. I've been telling traders for the last year, I made a nice little chunk of my returns last year because of this trade. We took this trade up from 102.50, 102.70, all the way up to 108.00. And then we took it down from 108.50 all the way down to 106. And then I started to buy back in because I believe that in the longer term, if you give this currency pair time, we should be getting back to 110, 112, 114 at some point. Hopefully not in the forever future, but in the near distant future. So looking at the weekly chart or the daily chart as Gary shows, so it looks like there, Gary, your chart, if we break that high, if we break that trend line, then are you fairly interested in, buying the pullback? Like we pull back to the trend line, retest it, and then we look to go long again. Tyson, if you have any levels, I'm interested. And the reason why is I've gotten in, guys, I have 18 positions in. So I've got plenty of exposure. They're all small. I'm building all these positions, but I have 18 entries. I know exactly where my break even is. I'm in profit right now, and I'm watching these profits roll in, and I'm trying to stay patient, and I'm paying the swap, which is annoying, even though they're the same interest rate. I'm paying the swap. But I'm going to hold on to it minimum to 107.50, and ideally, I'll be very happy if I can hold on to 108, 108.50. That would be a huge chunk of profit for me. And really, if I make every mistake in the book this year, I can still come out okay if this trade comes even remotely to my fruition at 107.50, 108.50. So your thoughts are fair.
I'm going to give Tyson a word, and then I'm going to go ahead and comment too as to what I would do on this. Go for it, Tyson.
Sure.
Yeah, so pull up the charts. This is the exact trade I would take. I would lock in profits right now or hedge it. I love the long side. I think I'm going to call this trade out right now. We can kind of map this out and we can track this. Somebody who watches this video, hold my feet to the fire on this trade. I like buying at 102.70. I don't know if we're going to get down there, but I love the 102.70 level. I like placing a stop at 101.70 or 10. What is that? 101. 101.15. So 102.70 long. Place a stop at about 101.15 and a target at 107.50.
Love it.
All right, let me write it over here. So you're saying buy at
102.70.
102.70. All right. Yep. All right. Yep. And then you're going to go ahead and put the stop loss.
Stop at 101.15.
At 101.15.
And this is one of those trades, honestly, traders, I would give this even more room. I'm not saying I would trade without a stop, but I would probably say I think that low is going to be quite protected. But if I wanted to put a stop loss in, that's where I would go. I don't even mind putting a stop loss between the major swing low there, but that's fine. And then the target would be 107.55 for me.
Okay, good. All right, I've got this right here. Now, I guess the question here is, Tyson, Why the buy at 102.70?
Yeah, main reason is because we're bumping near. This is going to be a tough part to get through, and the reason why this is going to be a difficult area to get through is because, again, it's that historical price action of what happened at this level. We gapped higher, we rallied, bulls tried to take control, and bears just absolutely just pummeled them in the face right here. And we're sitting at that downtrend line. So this is going to be, it's just going to be a difficult area. We're going to get through it, but it's going to be a difficult area. And also, what we're going to do, just structure-wise, this forms just a brilliant-looking head and shoulders pattern. I don't know if we're going to get all the way down to my buy zone. But the reason why that I want that buy zone there is because I always think about where is the origin of the move? Where did the move originate? And this last big breakout move originated from right around that 102.70 level. And so if we do retrace back down, I'm going to look forward to this retracing down to the origin of the move and then finally exploding back up and finally getting through that downtrend line, eating through all that supply, sitting right where we're at right now, and then getting up to that 107.55 level. So I might be a little conservative on my entry. I might have to update that in the next couple of days or next week. We can talk about this again. However, I love that level to buy at, and I really am confident in the 107.55 level being hit.
All right, I'm going to go ahead and mark it off here as the Tyson trade right here.
There we go.
You'll have to use a lot more. You'll have to use a lot more space in the chart to Chris trade. The Chris trade's going to have 18 entries, just so you know.
All right. Okay, I'm going to keep it over there. Tyson, all right. So this is my views, all right? So checking it out. My thing is, and you guys know how I trade, right? I'm pretty much a support and resistance trader. So when I'm at support, I'm buying big. When I get to resistance, take profits. When I break through resistance, I trade the buy on the retest. If it hits resistance and holds there, then I'm looking to sell it, depending, of course, where I'm anticipating price to move. So if it's hitting resistance right here, I'll probably be taking profits off the table and looking to sell back down south. But the overall picture is important to me. And if I look at the overall picture on this, I'm seeing the market inside a range. And so if I'm looking at the range, then I am expecting price to go all the way to the top here, which means that, yes, there could be some sort of like a stall or interruption to the actual move, but then it's eventually just going to go ahead and continue. Now, how would I identify that, right? I would identify this move by looking at wave structure. And that's my big thing here. When I look at this downward trend line, I look at the wave structure and I say to myself, okay, I don't want to cut myself short from getting out of a trade if the market's going to move up a little higher. And if it's going to move up a little higher, I want to see that break to confirm that. Now, check this out. Here is the extension, the move right here. And it's priced at around about this level. This is the 1.618. Now, have you ever seen the market move through the 1.618 and stay above it? Yeah. All right. So if we get a nice little break of this trend line, then what it's going to do is I believe it's going to chase after this high right here, and then it's going to stall up above here. So it's going to do something like this, where it trades up above here, breaks through this level, it's going to go up here, then it's going to come back down. Now what's going to happen is it's going to move like this, and it's going to sit here in a little bit, and then it's going to continue to rally. Traders are going to think it's going to try and come back to the backside of the trend line right here, but because this 1.618 is going to hold it as a support level from that level, it's going to go into sideways movement, a bit of consolidation, and then a breakout towards the top side again. Now,
so
how do I know that this move is done?
That's the perfect trade right there.
Yeah, just trade the breakout.
100% right. So either we buy where I said, or we wait for the breakout, just like you just said.
Yep.
Right. Now, what I'd do is I'd go down to the lower time frame right here, and I'd look at the wave structure. So this is the first strong move that we had right here. This is the big move that we saw in the larger time frame. There it is there. And so what I do is I look at this and I say, okay, if that's the case, then I know that the market moves in waves with inside waves. So then what I'm expecting here to happen is I'm expecting the market to go ahead and create a wave 1, 2, 3, 4, and 5 to complete this move right here. If it blows through there, then it's going to sit there. So what I'm going to do now is I'm going to go ahead and take a look at the details around this inside swing. So I'm going to go ahead and move this to there. That's my first swing. I know price is going to stall there, and this tells me right here. You see how price? Oops, sorry. You see how price is going to go ahead and test this level right here. Maybe go through it, get to that level, but then it's still got its final move to the upside. So this will be like wave 1. This will be wave 2 right here. So wave 3. And then wave 4, once it comes back, this will be wave 4. It'll come back shallow, rally through to get to that 5th wave on this inside swing. And that's where it's going to trade above that major resistance right here. So it's going to trade around there. And then that's where we're going to see that little bit of a dip, because this is going to be a larger wave 3 right here. And this is larger wave 1. And this is going to be large wave 2. And so then we're going to look for a large wave 4 correction here, which is going to test that 1.618 of the previous swing, and then head back up north. So I'm
Garrett,
going to
real
say
fast,
this.
Could we set, both of us could set our trades up essentially right now, because we're both kind of reluctant to buy exactly right here.
Yeah.
I want to buy lower. You want to wait for that breakout and kind of the confirmation of those you want to start buying on that confirmation of the wave 3 pullback, or essentially pullback after the wave 3 is complete. So
Right.
we can kind of both set our trades up at these points where if we break above, then everything you're saying, I agree with 100%. Whereas if this downtrend line holds, then the right place to buy is potentially where I'm looking to buy.
Yeah, so I would definitely, just to add to what Tyson said there, definitely look at, like I said, I'm a resistance and support trader. When I add to resistance, I'm taking profit, right? So we're at resistance. So I wouldn't be looking to enter to buy right now. That would be foolish for me to do that because I'm at resistance. We don't buy at resistance. But if I'm in positions and I'm looking at a long-term position, then maybe scaling out of your positions to give yourself a little bit more room for the market to correct itself, for that another push to be able to buy back in again. That's an option. You make some money. But also you've got some money in the market so that if it does break that level, then you're still not out of the market. You still got some cash in. And then as the price goes back and retests and does those little short retracement, you can start slowly loading back again for that ultimate target to the upside. And also, if I was not in the market right now, then I would stay out on the sideline, wait for the breakout, then go ahead and then start trading it. But I'll keep very close eye on what the intraday movements are doing, because that's ultimately going to tell me whether I've got in at a very bad price. Because sometimes you don't want to get in and then get the market to pull back and you think, oh crap, I picked up the wrong direction. And all it's doing is just correcting before it takes off again. And if you keep your stops too tight, what's going to happen is you're going to take a couple of pops before the market takes off, and then you have to make up your losses that you made before you actually in the money. So, that's something to consider as well.
Yep.
But that's a good trade. Good trade, Chris.
Yep.
Tyson, bring up another currency pair.
It kind of fits within a little bit of what we're talking about here. Aussie yen. I like it. I don't like it at this exact level, but what I'm expecting, two spots. I'm looking to potentially start a short position at around 69.60. That's that gap fill, and I think that will be good. I don't necessarily think it's going to be great for a bunch of moves. I don't know if it's going to get us back down to the bottom of those channels. But I do think we'll get a decent size retracement of, I would expect a couple hundred pip retracement at that level. And then my key level that I really like to sell at is right around 72.50. That's kind of the level that I think between 72.50 and 75. So that 250 pip area in there, I think is going to be really key. And I think that it could take a little bit of time, but that's when we're going to come back up towards that downward channel that you have there. I think that 72.50 to 75 level, that's going to be my key shorty area.
Oh, right up here at the top, yeah?
Right in that area there. But what I'm going to do is when we reach 69.50, 69.60, I'm going to look to take advantage of a kind of a shorter term, maybe a day or two retracement short. Then I'm going to look for that next push higher into the 72.50, 75 level. And that's when I'm potentially going to look to load up a little bit stronger, a little bit bigger. And then I see a decent size. I see us potentially getting probably a 50% retracement from the bottom up to that channel, probably a 50% retracement. So, yeah, right down into that level. Maybe even, I don't know if we're going to go all the way and test the bottom of the channel, but I see about a 50% retracement of the overall move.
Gotcha.
Let me throw this out there,
Chris?
Tyson and Gary. So I want to ask, we've had this discussion around, March's lows. In the Forex market, how significant do you think those lows are? And the reason I ask is, the stock market lows, I don't think those are the lows. But when we see I mean, we had a flash crash early in March. We had the market blow through those flash crash levels, and we had that, kind of capitulation move above and below that. So, looking at something like the Aussie yen, I mean, you had that great channel, Gary, on a weekly chart, monthly chart, daily chart. I mean, if we revisit some of those levels, I mean, if you look left on a higher time frame, a lot of those bottoms were random spots. I mean, they weren't significant, like, oh, that's an obvious level of major support from 20 years ago. It was almost there. It was kind of getting there, but it didn't quite get there. So, I mean, I would hate to see that a flash crash type move is not a significant top or bottom, but I think we're obviously using them now to force these rebalancing moves. But I'm interested, like, do you think that those are lows that are significant enough that, I mean, if I was long-term and I could walk away on buying Aussie Swiss at that same low from March and I could walk away for a year and have it pay me in the long run, I would think that'd be a good long-term trade.
Here's what I'm thinking. I'm thinking these lows are similar to the flash lows that we put in December 2018. So meaning we're going to see nice retracements, we're going to see basing, but they'll eventually break.
You think they'll break?
I think they will break. I don't, because it's now the logical side to me says, man, these are just so low. But the other side of me that remembers 2008, 2009.
Sure.
I don't think
when you thought the pound yen was going to have lows.
Low in 2008, 2009. I look like a fool. I thought pound yen 200. Man, this is low.
Yeah.
Yeah, right, Tyson. You don't know what low is, buddy.
Sure.
However, I think if you fast forward 6 months from now, I think you're good.
Sure.
I think if you fast forward a year from now, I'm not quite sure. I think if you fast forward 5 years from now, you're 100% good.
Yeah.
If that makes sense.
Sure.
Yeah.
Well, this is look from a technical perspective. I'd break it down this way right here. I would look at the chart, and I pulled up a weekly right here just to get a little bit more input here, and I can kill everything that I have on right here and start all over again. And I look at the markets from a trend-based, but also I look at the overall structure. And if you look at the overall structure right here, look at this. Since 93, son of a gun! Since 93, the markets have been moving sideways from the top to the bottom right here. So here is the larger picture right here. This is what we're looking at right here. So we're definitely at a bottom. Look, markets could go ahead and go a little lower. I agree with Tyson. We could go ahead and retest this 2008, I think it was. Let's see here. Is it 2008? I believe it is.
Yeah, that's
2008 lows. Yeah.
Mm-hmm.
So we can definitely go ahead and retest the 2008 lows. So, but the good thing is on this whole thing right here is that we're definitely range bound. There's no doubt about that. And so I won't be paying too much attention to the larger elite wave structure. I'll be more interested in figuring out whether the short-term structure is paying off. So what I do is I go ahead and take a look at this inside swing from here to here, and I notice that price hit the 1.618, which is beautiful. Create my next swing going, create my next swing. I think this is off here. There we go. Next swing is going to move from here to down here. Now I'm looking for price to stall at the 127. All right, boom. Check it out. Look what's happened right here. Here's the 127. Even though it was a fundamental move, price went ahead and hit the 127 right here. So what am I expecting now? I'm expecting price to go ahead and take out the wave 4 high up here. But because I'm range bound, I'm expecting the market to go ahead and trade towards the top here because I'm not really paying attention to the swings, the larger swings. I'm really just looking for support and resistance here. So my 2 cents on this is this. This is a support level right here. We've got resistance up here at the top. There it is a few times. And we're looking for price to come back up to resistance here. We'll see some short-term support, resistance coming off these downward trend lines. I can go ahead and channel it. And this gives me a nice little setup right here. If you look at the channel line right there it is. Actually, going through this right here, we just slightly missed that. So I'll be real excited to be a huge buy in the market if we break through this channel line right here, because then I'm chasing after this target up here. And if we look at price opportunity, this is now another 600 pips before we get to that. Once it breaks there, we're looking at 1,500 pips, and then on its way to 2,800 pips to the upside. So there's a lot of opportunity here. If I just traded one currency pair and it was just the Aussie JPY, then I would go ahead and start. Definitely, I'm already a buyer. If I go to my document here in the Learn and Trading Room, Aussie JPY right here, take a look there. Continue buying. Trend continuation. Let's just keep buying. I'm going to buy it all the way to resistance. So I'm buying right now on Aussie JPY, and I'm looking for it to go back to resistance here. So go to Right Trader Max.
What level of resistance do you have? Because, yeah, I agree with the long right now. What level of resistance were you looking at?
Well, this is the downward channel. So we're looking at.
So that's a longer. Okay. So
yeah.
Okay. So you're looking also for it to go up longer term than I am. So the short that I just said could potentially hit its target by retracing some of that move that we had and still go up to your target.
Oh yeah. Yeah, absolutely. No, you're right on the money there. No, you're right on the money. So this is really solid resistance right here. If we break above 71, let's call it 7,200 because we're friends, right? So if we break above 7,200, so I call 7,200, I mean 72. If we break above 72, then this is definitely on its way further up. So until that point, I'm going to be a buyer right up until that point. Wait and see what the market does there. If we get a nice solid breakout of there, we go into the next level. Now, if you look at the short term, because I mean we have to really look at short term right now. Aussie JPY is hitting resistance, the 1.618 right here. All right, we went ahead and created the first. So this is our first wave swing right here. Now we get into a third wave target here, the 1.618. So I'm expecting a bit of resistance here, and then what's going to happen is price is going to come back and retest the trend line a little bit right here. Let's go ahead and pull it up here. So we're going to get another retest right here, and then that's going to be your fifth wave move. All right, and that's going to be the fifth wave move. And this is going to be what's going to test that 72 level that we want to go ahead and see if price breaks through it. And based on this swing right here, I'm expecting of 72 a deep pullback before price goes ahead and breaks through that level. So 72 is my target to the upside. I would be buying on Right Trader Max right now, all the way down, all the way up to 72. And if any dips that we get,
that just pullback at that 72.
Yeah, any dips will be just short term, like you're saying, Tyson. Just jump in on those short term trades and trade those short term trades. But the thing is, and Chris mentions it a lot of times in these sessions, and that be on the right side of the trend, right? And so when you're looking at these type of setups, I don't know if I want to be a seller if I'm not expecting price to come up to 72. At 72, I would definitely consider taking some sells at 72 because I think we're going to be in a much deeper retracement of 72 than we are of these levels right here. These are just temporary stops, pit stops, take a few drinks, and then off you go again.
So this is what's going to happen. I would potentially take a shot at that 69.60 level, and that would be for a shorter term retracement. Is just simply because that's where we fill that gap. So I'm just looking for a little bit of a reprieve there, and then we'll go up to those 72 levels, and I think we'll get the deeper pullback then. Sure,
absolutely. Yep. All right, let's go ahead and jump to another currency pair, and I'm going to flip over to. Let's take a look here. I'm going to actually pull up a document right here because there was a couple of setups right here that I wanted to look at. And there's normally one of the trend confirmation right here. So New Zealand Swiss franc is spoken about. CAD Swiss, I know that's one of the pairs. CAD JPY, Swiss JPY and CAD Swiss and CAD JPY. Let's take a look at those three. I'm going to just go ahead and take a look and see how they moving right here. Let's go to CAD Swiss first. And I'm going to go ahead and pop open the daily first because there was one that I said, man, I am really hot. I know this one is one pair right here, but it's not ready. It's not ripe yet. We've got to get above 69.75 before I'm buy. Let's go ahead and take a look at the next one. Swiss. I just want to see if this is the one. This one's the same thing. We've got to get above that resistance there before I'm a buy. We're at resistance, so trades are all off the table right now until we get through that. And then the last one here, let me see if this is the one right here. No, this is Swiss JPY. Oh yeah, this is the baby I'm excited about right here. Swiss JPY. All right, so I'm going to flip this down to a daily time frame so we can get some more information on this. And this is it right here. So, and I'm going to go ahead and let you guys know what I'm thinking, and I'd like to get your views on this as well. So check this out. So Swiss JPY has hit those bottoms. We're still in consolidation. We've got a lot of consolidated pairs in the long term. But we got some short-term gear down trading opportunities that are huge right now. And if we look over here on this, we came off support, so we're expecting price to move back up to resistance at about 118. Now, if we go ahead and look at the short-term moves over here inside the consolidation, we can see that price move to a wave 1, Wave 2 came back and retested. This is fantastic. This is what really gets me excited. So it came back to retest this level, never traded through that. And actually the trend line, I've got this, I call this the predicted trend line. This is where I'm expecting price to bounce off before going back up north, because it's not confirmed until it takes out the high. But what we're in right now is we're inside a fourth wave move. Now, if you understand Elliott wave, you'll know that fourth waves are most of the time consolidated waves. All right, it's the hardest wave to trade because of the consolidation. But when we add support, right, when we're trading at support, then it is a great time to start thinking about buying, even though it isn't consolidation. Because if you look over here, there's still a 350 pip range right here. And if it breaks out of the range, it's going all the way to the 115.86. So that's the fifth wave target, 115.86. And so buying here, don't sell at the top there, because it's going to blow up to the top here unless you're trading like target trading type strategies where you want to go ahead and sell here, but you plan to go ahead and keep selling right here. That would be fine. But if you're going to go ahead and sell here based on a trend trade strategy, you may get popped on this before it goes up here and then miss the opportunity to get to the 127. So right here is a huge opportunity to start buying. And so we went into the trading room today, and I spoke to the traders there and I said, all right, let's take a look at the opportunity. And here is the opportunity right here. We've just had price confirming a breakout right here. In fact, Chris and I will know exactly where that's at because oh, hang on. I'm getting all technical here with this chart. All right, so let's do this. Let's go ahead and pull up this right here. And so this was the breakout there. All right, so this is the breakout on the candle right there. That's the breakout. So on the breakout, we've got a buy signal already on the 1 hour time frame, and price has gone range bound right here. So what we've done is we've gone ahead and added positions in here. You can see I'm holding 2 positions here, but our stop loss is tight. It's kept a low right about here. A stop loss is down about here. So we're going to stop loss right about here. And so our stop loss, I believe, is in the, let's see here if I can get a quick low on that. I can tell you what it is. It's below this level right here. We're looking at stop loss below 111.72. So we are probably around about a 50 pip stop. It's averaged out about a 45 pip stop on both these positions. But if it blows up and goes up to the target that we're expecting to go to, which is going to be here, I'm just looking for the top of the range right here. But if it goes up here, we're looking at a 50 pip stop or a 45 average pip stop, and we're looking at a 210 pip target. And if it blows through there, if the daily time frame goes through there, then perfect, we'll hold on to that trade. But 210 pips, we've got a 45 pip stop. That gives us about a 1-to-4 risk-reward ratio, just a little bit more than a 1-to-4 risk-reward ratio. It's a good trading opportunity. And it's right there, man. But the most important thing on this is that you've got to make sure you buy it at the bottoms right here, all right, so that you have a decent stop loss, doesn't get in the way, but also it goes ahead and has that 4-to-1 trading opportunity. What do you guys think about that?
I actually discussed this in my trading room this morning, Gary, and I think you've shed a lot of light on the Swiss yen that I particularly was not super interested in. I looked at the range, I identified the range, and all I did this morning was said, hey, if we break above 114.15 on the daily, then I'll buy it, and I'll go after 100 to 200 pips. I see a nice little weekly. Tyson, I'm sure you're looking at some supply and demand levels up there towards let me find it's on a weekly chart, but something around like 115.50. I happen to really like the resistance around 118, which goes back into 2017, 2018, 2018. We have significant highs at 118. I could see this pause being that breakout where we break above 114. We hit, the de-extension that Gary's talking about, but also we just continue to drift up and find that bigger resistance point at 118. So, I mean, this is another reason that I like to identify consolidation, because if we can identify it, look, if Gary calls it gearing down. I just call it going to a different lens in a different time frame. But you can trade those ranges on smaller time frames. You can see trends with the highs and lows from 112 to 114. But you can also break above 114 and see that it's open from 114 to 118. And in my world, that breakout oftentimes gives you the kind of the better trend-friendly behavior, where you can be a little bit more aggressive on add-on trades and let profits run. and get, maybe 2, 3, 4, 5 entries running before you take some profit. So you've put a different spin on, looking at buying it now to kind of motivate me to take a second look at it, because you're right. I think going back up to that intermediate high at 114 makes perfect sense, especially with the stop loss, especially with an exit strategy.
Sure.
And then, otherwise it's safe haven versus safe haven. That's not really a game changer as far as like which one's going to have the upper hand. I think, right now the yen is probably showing the most weakness versus the Swiss. So I think that's a good direction to trade. I think Swiss yen looks better and more favored to the upside for right now. But I think overall we're going to find 118, and then from there I'd sell it.
Yeah, I agree. I think having this for a 250, 300 pip target makes sense. I mean, if you look at, again, if kind of going back to the Aussie yen, I'm looking to maybe short around 69.60, which is 120 pips away. And relatively speaking, if we're kind of looking at percentage moves, that would be about the same percentage move in the Swiss yen. So I think they're going to trade in a fairly correlated way. So looking for 200, 250 pips to the upside, I think is completely fair, and I think it's doable. I'm not a big fan. Again, it's just hard for me. I don't believe the rally in the stock market, and this is where I allow my ideas to creep in. I'm not a big fan of getting long-term anything against the Swiss or the yen at this point. However, this is a perfect opportunity where you've got those shorter term, those couple day opportunities where you can plug a strategy in and look to generate some income and get, Tyson, get what you think out of the way, because the market doesn't give a crap what you think, Tyson. Just trade what is.
Sure.
Right.
Sure, absolutely.
So I do like it.
All right, well, good. Hey, guys, we're going to wrap it up here, but I think that's all we've got to do. I'm going to give Chris an opportunity to do his final words, and then Tyson, and then I'll do the closing on that. Chris, you want to go ahead?
Yeah, sure. We're kind of doing take two here since we had some technical difficulties on Facebook, but we're going to make sure this gets out to everybody on all sorts of social media outlets. But, these sessions are so much fun. We keep getting a lot of feedback, and we keep getting more and more hits and views on this. So, keep the questions coming in for Tyson and Gary and myself. Stay engaged. I think this is the best time to, probably have some of the biggest opportunities that you might see in, I don't know, maybe the next 10, 15, 20 years. What we just experienced over the last 2 months has been a kind of an outlier type event. Things like this certainly don't come around very often. What it, stems from, if we're talking about the brewing of like coronavirus and what happens at the end of the month, and this, dead cat bounce / 25 to 30+% thin market rally in the stock market, like Tyson says, I don't really believe it. I'm not buying it. However, it's happening. So, I love being a currency trader in this environment because there's so many ways to pivot. There's so many ways to hedge. There's so many ways to be nimble. And as we've all mentioned, there's so many ways to also adapt to what is happening. So, our long-term approaches, we can always have long-term positions. We can always be swing traders, but we can also adapt and take advantage of what's going on right now, which is why we have some great scalps running. Just this week, today alone, Aussie, Swiss, Aussie yen in my trader room. We closed out. I had a trader that has just joined me he's brand new trader, just joined me, up 400 pips today, just closed out for profit. It's like, you don't have to be a seasoned veteran professional trader to do this, but you do have to have some patience to learn, and you have to have the patience to develop a process. But, we can help you with that. And so we're always looking to evolve. And this is why we do sessions like this. We could bounce ideas off each other. So, we're not going to stop learning and looking and exploring and investigating. And we're just trying to, make profit and help other traders do the same. So it's but a great time. So this is an awesome video, great segment today, guys. And looking forward to many, many more.
Great stuff. Tyson?
I sound like a broken record, but it's the same thing been, I think, saying for 3 or 4 weeks. It's opportunity. And I think today's session was a great display of that, where in one of what was the Aussie pair that I was looking to buy? The Aussie dollar. Was it the Aussie dollar? I can't even remember now. That I was looking to buy lower, or and then
New Zealand too.
Aussie New Zealand. Yeah, sorry about that. I got the pound yen and the Aussie yen in front of me and all this. The Aussie New Zealand, and so great example of we're looking at the markets in the same way, and you have two opportunities to take advantage of it. Aussie yen is the same type of trade, in Swiss yen also, where I am longer term, I'm bearish on it. However, I think there's great opportunities to take advantage of what Gary just said and deploy a strategy to the upside for 200, 250 pips. So it's opportunities to take advantage of what is happening today forget about what you think should be, because it doesn't really matter. Just trade what is, and find a way to get yourself, for me anyway, it's find a way to get yourself out of the equation, Tyson, and just trade what is real and what is happening in the charts right now. So it's all about opportunity. And as Chris said, these sessions have been awesome. I'm excited to continue to do these, continue to ask questions. Hopefully I think there's a lot of traders getting a lot out of these. I think it's probably, for the half an hour we do a week, it's maybe some of the best content that we put together in such a short amount of time. So look forward to continuing these, but this has been fun.
Well, fantastic, guys. Well, I appreciate guys being here. And my final words is very simple. I'm a high probability type of trader. I like high probability. So when we're at resistance, don't buy. If we're at support, don't sell, right? You want to buy at support and you want to sell at resistance. So, and the reason why I do those type of things is because the probabilities are going to be higher that the market's going to bounce off and get rejected off those levels and move in the opposite direction. And so when you look at trading, simplify it, right? Don't complicate things, because sometimes we can do that. And I know Tyson and Chris would probably agree with me. Sometimes us as human beings, we complicate things that are simple. And so just simplify things, look at the bigger picture, look at the probabilities. If you've got a big range, probabilities that price is going to move up higher. It's a huge opportunity, right? So don't be caught up in buying the breakouts, because those breakouts are probably false breakouts, because price is going to be pushing back up again. Wait for the confirmations, be patient about that, and if you're patient enough to wait for the opportunities, when it presents itself, you're going to be able to make some good profit on those trades. So very importantly, look at the probabilities, and again, just be logic about it. If you're at resistance, price is going to be rejected. If you're going to be at support, we're going to get a bounce. And so look to buy and sell off those levels, but also be patient enough to wait for the confirmations. And if you're using a auto trading system like Chris and I and Tyson are doing, then in the EA, all the logic, it's already been coded in to help you be more consistent. That's why I'm a hybrid trader. That's why I do technical analysis using the trading robot, because being a hybrid trader allows us to be more consistent, because now it's not human error anymore. Now we just go ahead and find the direction, deploy the system in, and Chris mentioned that too. You don't have to have any emotions in it. You just set it, forget it, and it becomes better for you as a person, because you get time to spend with the family. You don't have to be glued to the computer unless you're Chris. All right, I'm just kidding, Chris. But you don't have to be in front of the computer all day long and trade early morning sessions. You can go ahead and set and forget it. And that's really what you want to do. So that's my view. That's my point right here, is just to make sure that you're looking at the highest probability and then using something to help you be consistent, which automation is absolutely the way to go. With that being said, traders, I'm the FX Big Dog, and I've got Chris and Tyson with me, and we want to wish you guys a great weekend, and we'll see you next time. This is the FX Big Dog signing off.
Thanks, guys.